In this video, you will learn 1. How volatility indices really work in the market and how you can trade them to become profitable with them. And second, you'll be learning how many traders keep going down the rabbit hole of losses when trading volatility indices. I'll be showing you the reason why a lot of people are still not making money with volatility indices and the reason why they are not making money with volatility indices. And thirdly, I'm going to be teaching you the best volatility indices strategy that even beginners can trade right away. It's so easy that you can start trading it on your chart today and many more. Now let's get to it. So all of you are watching this video because you want to learn how to trade volatility indices and you really love trading volatility indices. Now, the reason why a lot of traders like to trade volatility indices is because it is one of the best Deriv synthetic assets in the market. When you talk about volatility indices, these are indices that has a lot of volatility in the market. And this is helping us a lot because as traders, we need the price to keep moving. We need the price to be moving, not choppy and all that. And volatility indices gives us that exact thing that we are looking for. Now, this volatility indices works like really great for a lot of trading strategy. But there is one thing that I have noticed about some traders, and this is very, 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 very crazy, I tell you. Now, there are some traders that will want to bring their lifestyle into trading. Like some of you think that because you have a lot of girlfriend, you can come to the market and you start switching strategies the way you are switching girls in the market. So today you are dating Deborah, tomorrow you are dating Jennifer, before you know you are dating Rebecca, and a lot of them. So you are switching from one strategy to another, thinking that that is going to help you, which is very, very bad as a trader. Now Deborah is in your house, and as she's with you, Rebecca comes in, and one will ask you, who is this? The other one will ask you, who is this? And before you know it, they start fighting. That is the way a lot of trading strategies are always conflicting each other. For example, if you are trading the support and resistance, and you want to trade with a trend line as a complete strategy, that's different. But some of you are trading the support and resistance, you are trading the order block, you are trading the trend line, you are trading all the trading strategies, you are trading liquidity, you are trading supply and demand. This is not going to help you as a trader. There are some trading strategies that work in line with each other. For example, this trend lines and support and resistance, they work together. Trend line can literally work with any other trading strategy in the market. When you come and you are trading liquidity with support and resistance, you are trading order block and moving average, you're combining a lot of trading strategies. It is not going to help you as a trader. So one of the best things you can do for yourself as a trader is to look for one trading strategy or a merge of two trading strategies to give you extra confirmations in the market. So when you have those two trading strategies, you are good. And if the both of them align with each other, because there are some trading strategies that when you want to trade them, you notice that the other one that you're trading with it is not giving you the same signal. So now the other one might work, but this new one that you have is not going to work anymore. So because of that conflict that they have with each other, that is why you should stop trading all the trading strategies. Now on volatility, a lot of trading strategies work, and we are very, very happy for that. And one of the best trading strategies on volatility is the support and resistance. This trading strategy, even if you are a complete beginner to the market, you can copy it today and start trading it on your chart. It is very, very simple to trade, and if you work on it, you are going to see a different kind of results in your trading. The volatility indices that we are trading here is volatility 75-1s, and you can trade this on any volatility indices in the market, and maybe other assets that have good price movement like these volatility indices. So, but this one that I'm going to teach you right now works on volatility indices, and this is the only trading strategy that you need to use on volatility indices. If you can take your time and focus on this trading strategy, you will see an easy you will have an easy life trading volatility indices. I tell you for a fact. Now, some of you already know about support and resistance, and I just want to go over a little bit. So we have two types of support and resistance. We have the base support and resistance and the flip support and resistance. Now, for example, the base one is those one that a lot of traders teach you to draw. You need about two spots in the market where price has moved drastically from. Like, for example, now we have this point in the market. You see this point on the second one. Look at the second one here. So these two places with my red box are areas in the market that price have moved drastically from. You see that when the price touched that zone, there was a lot of volatility from that spot. Look at what the market did. The market moved from that zone down. You see, look at the price movement there. And this point here too, the market moved really massively from that point and came down. Now, when you have these 2 points in the market, you need now when you have these 2 points in the market, that is your that is your resistance zone, and the support zone is almost the same thing, only that it's just opposite. So right here we have a point here. Let's see the second one. Let me draw this out. Right, so here we have the second point. You can see that these 2 points in the market moved really great from that point too. So that will give us a good support zone. So with that support zone, we can now trade with anything we see in the market based on the trading strategy when they return to that zone. So right now, this support zone is valid. This resistance zone is also valid. So resistance is like the top, support is the ground. So let's imagine that you're in your room. Take the resistance zones as your ceiling, and let the support zone be your floor. So each time you bounce up to your ceiling, let's say you are even tall enough, because I know that some of you are short. So let's say you're tall enough to hit your ceiling, and you just jump and you hit your ceiling. The ceiling, when you hit that ceiling and you are tall enough and you can jump very high and to hit that ceiling. So when you hit that ceiling, you will feel that resistance. Oh my god, you will feel the resistance, especially when it's this POP ceilings and or those wooden ceilings. When you hit your head on it, you will really feel the resistance. So you will feel that resistance when you jump. So that is the resistance, meaning that you cannot break that ceiling with your head. You cannot jump and just break that ceiling with your head. I know some of you can, more respect to you, you can break ceilings with your head, but you will feel the resistance. That's the whole point of it. Now, before you jumped, it was the floor that supported you to jump, because you cannot jump in the air. There's no way you'll be suspended in the air and you start jumping. No, that's not possible, except you're a witch or a wizard. So that is not possible at all. So the floor gives you that support to jump up. And when you got up to the ceiling resisted you and brought you back to the floor. So that's the way that a lot of these price movements happen. So you have the support, keep supporting the market to go up, and you have the resistance, which will keep bringing the market down until it is overpowered, and then it will be broken out. Like for example here, look at this point here. See this point here, and what happened here. So right now here you can see that the support zone supported that market to go up, but now the market does not have enough power to get to the resistance zone, so it pulled back again to the support zone. So now it is at the support zone again, and this time around there was enough power to push this market to the top there. Now this trend is what moves the market, and you can see that when the market came up here again, this is our strong resistance zone. Like I said before, you need a strong zone to call a resistance or a support. If not, it's not going to be able to work out. Now this zone here, which is our resistance zone, will now help us to keep resisting the market. That means that each time the market gets to any of these two zones that we have here, we have to be on the lookout. We have to know when to enter the market. We need to be very, very alert on what is happening. So this resistance really work a lot of times. Why? Because from the beginning where we drew it from, it was very strong and active. The reason why a lot of support and resistance always fail in the market is because the point where you traders draw them from is very weak. So you don't expect the market to move with strong volatility when you draw it from a very weak spot in the market. So it can't just make little moves and you just draw your support and resistance. It's very bad. Some traders will like to draw more lines. Let's say pull one in the middle here, see, like this one here, but that is not good. That is not good. You just need a strong spot. Two spots in the market is okay. Take one as your support, take the second one as your resistance, and you are good. So now when you are done, this one is the first type of support and resistance. We also have the second one, which is the flip support and resistance. The flip support and resistance. This is the point where you have a lot of trades. Like you will see like a ranging market, more of like a ranging market, or a normal price movement moving in a trend. So this type of support and resistance is always found in trending markets. So for example, right here we have this price movement here. So look at all these touches here. Look at the second touch here. Third touch. So right now this three box here represent three spots in the market where the market was trying to break out of a resistance. Now you can see that this resistance zone here, they keep bouncing the market down. They kept bringing the market down. They kept resisting the market. When it came to this first point here, they resisted it. It came to this point again, they resisted it. Then they moved up here, they resisted it. But when it got to this area here, there was no more power to resist the market. At that point, the sellers are already weak, so they cannot resist the movement on the market from that spot anymore. And because of that, the market was able to break out. Look at this breakout here. This strong breakout from this resistance zone. So when there is a breakout like this, what you should be looking out for is for the market to return to that spot. Now, in a zone where a lot of activities have happened, this is where the market is always going to pick up from. I don't know how your environment is, like where you live at, but there are some environments that have been known for some type of things. I don't want to mention things like you know them for some type of things. There are some areas where if you want to be safe at night, you don't pass there. There are some areas where if you pass through those areas, there's something that you know you're going to see in that area. So we have this all around the world. Now, it is the same thing with a chart here. When a zone is already notorious for something, you know that there is a strong strength in the market to alter price movement. So when you have this resistance here, you have this resistance here, you have this resistance here, it means that this spot, this area in the market is a very strong area. So for the market to break out from that place, which was formerly a resistance zone, it means that the buyers have entered fully into the market. And because the buyers have entered fully in the market, each time the market returns to that zone again, like it did here. Look at this price return. So each time the market returns to this zone here again, we know that the market is going to react. There will be a strong reaction in the market. So because of this, we are going to be trading this zone in the market. Now, just knowing the support and resistance zone in the market is not enough to make you a profitable trader. Because right now you can see that when the market returns to this support and resistance zone, you will see that most time the market will not move from the first touch. So right here we have this market here. It touched the now support zone, because when it's already broken out, it becomes a support zone. That is the flip. That is what makes it a flip. So when it breaks out, it becomes a support zone. If this was a support zone that was broken, if it breaks out, which is downwards, it will now become a resistance zone. So right now that we had this resistance zone here, each time there is a breakout like what is happening here, the market will become a support zone at this point. So when you have this support zone in the market, there is something that you have to really look out for. So right here, the market touched this support zone now, this flip zone here, and you will expect the market to move up from that point, but it didn't move up. You can see it didn't move up, which means that knowing the support zone alone is not enough for you to trade the market. Now, when it returns to this point again, look at this price movement here. You will think, okay, because the market has broken this little zone here, it will now start moving up, but it didn't move up. So it came down again, and you can see it was from this point that the market started going up. Now, most times you are going to see that even when the market has started moving up a little bit like this one, we still can't trust that price movement, because it happened here already. This one happened, it moved up, but it now broke it. So that means that if this one moved up again, there is a possibility of the market breaking that zone again. This our little zone. There will be a possibility of the market breaking it. And because of that, I'll be trading something that I call the zone retracement. So how do you do this zone retracement? You trade it when you see the market move up, retrace, and give you an entry candle. So for this strategy, the best entry candle that I use is the engulfing candle. This engulfing candle here. So what it helps us to do is that it gives us the full information that the buyers are inside this market already and they want to move it up. So right here you can see this engulfing candle here. After this retracement, make sure that the price movement did not break this last zone, because if it breaks that last zone, there is no need to trade it again. So after the break of that former zone, you don't want to see another break. You want to see a retracement. And if this ends up being a break moving below this former price movement here, it means that we cannot trade even if it gives us an engulfing candle. So we must wait for the market to retrace, and at the same time not breaking the former low, like this last low here. So it must not break that last low. So when that has happened, you wait to see your retracement and an engulfing candle. When you see that engulfing candle, that's a go ahead for you to trade the market. So from that point you can trade the market. It's as simple as that. From that point you start trading the market, and you will see yourself making a lot of profit from the market. Now let's try to understand this. So how you trade this is that when you see that engulfing candle, you buy. Yes, you buy immediately. Place your stop loss below that last low. See this low here? Below that last low, or below that engulfing candle. Now I just advise you to place it below the last low. That will be better to avoid stop hunts. So you place your take profit target at the next high. You can see, so when you see an engulfing candle, when it gets to a zone, take the trade immediately. Place your stop loss below the last low and your take profit at the next high. And if you check this setup very well, you can see that our take profit target was hit. Now sometimes it won't hit take profit target, so you can make it like TP1, TP2. So let's say you can place your TP1 here. You see? So you can place your TP1 here or your TP2 here. So any of them is very, very good, but make sure that you have at least one or two. So you can place your TP at the right place. And when you place your TP at the right place, you don't have a problem. Make sure you just at least, let's say, half of that price movement and then the full price movement. This is your second take profit target. So it is very simple. Now let me show you guys another example of this setup. Alright, so here we have the market moving in strong zones in the market. So the first thing we have to do is to identify our areas of support and resistance. And if you check throughout these price movements here, there are some areas that really stand out from the market. We are talking of areas like this one here. Let me mark the points that we are drawing out from. So we have this point here, and let me take this again and draw it out. So take this one, place it here. This is our second zone, and this zone is our support zone. So we need sometimes we can see a resistance zone, a strong resistance zone, so we can draw out a resistance zone too. It's not a must that anytime you draw a support you must draw a resistance. All you need is that particular zone that moves the market. So you can just draw this your support zone here with these two guys, with these 2 points here, and you can trade it. So it's not a must that you draw out your support and resistance. It has nothing to do with your results in the market. It just gives you more opportunity to trade the market. So you can just draw your support zone and trade it. You don't need to draw your resistance zone because you drew a support zone. And I see a lot of traders just messing this up in the market. They think that each time there's a support, there must always be a resistance. Sometimes you just need a strong support or a strong resistance zone, then you trade them. Now, what matters the most is the zone, that area in the market where price movement is very, very volatile for us to trade. Now, we have this resistance zone here because we want to look out for more areas to trade. So we have these 2 points, here. Let me draw out a line on them. So let me draw this line here. top there and there. So now we have a solid support and resistance zone in the market, so which is great. So now if you check, you will see that these two spots here has given us a zone. And look at what market did here. Market came to that zone and then it gave us this price movement here. Like I told you guys earlier, you don't need to trade the first price movement that touches that support and resistance zone. It is very risky. You need to look out for something. So this first price movement here didn't work out. It was broken again. So when it broke that price movement, then it now went up and gave us a retracement. And now watch out what happened here. Look at what happened here. Right here, the market retraced and we have an engulfing candle. We have this engulfing candle here. And what does the engulfing candle signify again? It tells us to buy the market, because right now we are in a bullish setup. So it is happening at the support zone. We want to buy from the support zone. Now it is giving us a retracement with an engulfing candle, and that will guarantee us to trade the market with the engulfing candle. So now what do you do? Like I told you guys, there are two ways you can place your stop loss. Like I told you guys, there are two ways that you can place your stop loss and two ways that you can place your take profit targets. The only thing you will do after watching this video is to go to your chart and put some work in, like go and analyze price movement that have moved like this, see how they move, so that you can also know how to program your own trading strategy. I might know a lot about this trading strategy, but when you personalize it for yourself, you will see other things that you have not been seeing in the market, and you know you will now be able to trade efficiently with this strategy. Now you can either place your you can enter immediately you see the engulfing candle, but for the stop loss there are two places you can place your stop loss. One is below the candle that one is below the candle with the engulfing candle. That is the low of that small candlestick entry. That is the number one place you can place it, and the second place is below the last low. So any of that is great, but if you just want to be safer from the trade, just place it below, or you can place it below here, anyone you like. Now you can place your take profit target either at the middle of that price movement. So here is the middle of the price movement, and here we have the top of the price movement. And see what happened here. The market did not hit that top. So it is very, very important that you either take the one at the middle or you take the one at the top. But the middle one is the surest one. This is the one that it is more assured for you that it is going to hit. The one at the top is not really assured for you all the time, but the one at the middle, that's your guy. That one will help you a lot. So when you have that, you can take the trade, lock your chart, like go and do something else and come back to see if it has hit your take profit target or not. So guys, if you have learned something in this video, which I know you have learned a lot, make sure you subscribe to this channel. Make sure you like this video so that other traders can be able to see it and learn how to trade Deriv synthetic indices. If you are new to Deriv synthetic indices, you will see a link below where you can register your new account with Deriv, and you get a bonus from our broker for using that link below. And now if you want to join our signal group where I drop daily trading signals in the market, you can click on a link. There's a link down there where you can also get the signals and start trading with me. So it's very, very simple, guys. And I love this trading strategy, guys. If you are trading volatility, make sure you are trading this strategy. It's very, very great in the market. Now, I will see you guys in the next one.